If you're a beginner, then you need to hear this. Hey everyone, welcome back to the channel. Today we're diving into 5 essential crypto investing tips that every beginner needs to know before getting started in 2024. Tip number 1. Understand what you're investing in. It's crucial to understand exactly what you're investing in when it comes to cryptocurrencies. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They are decentralized and typically operate on technology called blockchain. This means that transactions are recorded on a public ledger that is maintained by a network of computers. Many crypto assets are backed by nothing. No hard assets, no cash flow, nothing. Unlike traditional investments like stocks or bonds, which are backed by companies with tangible assets and revenue streams, many cryptocurrencies have no intrinsic value. This makes them highly speculative and volatile. You're relying solely on someone paying more for it in the future for you to profit. This is often referred to as the greater fool theory. The idea that you can make money by selling something for a higher price to someone else, even if it has no intrinsic value. This can be a risky strategy, as it relies on the continued interest and investment of others. Some of the most popular coins include Bitcoin, Ethereum, Solana, and Cardano. Bitcoin, created in 2009, was the first cryptocurrency and remains the most well-known and widely used. Ethereum, launched in 2015, introduced the concept of smart contracts, which are self-executing contracts with the terms of the agreement directly written into code. Solana and Cardano are newer entrants to the market, each with their own unique features and potential use cases. Before investing, make sure you understand the potential upside and downside. This means doing your own research and not just relying on the hype or recommendations of others. Look into the technology behind the cryptocurrency, the team developing it, and its potential use cases. Consider the market conditions and the overall sentiment towards cryptocurrencies. If it's not backed by an asset or cash flow, it could end up being worthless. This is why it's important to only invest money that you can afford to lose. Diversify your investments to spread the risk and avoid putting all your eggs in one basket. Remember, the cryptocurrency market is still relatively new and highly speculative, so it's important to approach it with caution and a clear understanding of the risks involved. For more crypto investing tips and to stay updated with the latest trends, make sure to subscribe to our channel. Hit the bell icon so you never miss an update. Tip number 2, diversify your portfolio. When it comes to investing in cryptocurrencies, one of the most important strategies you can employ is diversification. This means spreading your investments across a variety of different assets to reduce risk and increase potential returns. Don't put all your eggs in one basket. This age-old adage holds especially true in the volatile world of crypto. By diversifying, you are not overly reliant on the performance of a single asset. Instead, you spread your risk across multiple investments, which can help cushion the blow if one of them underperforms. Diversifying your crypto portfolio is crucial to manage risk. Imagine you have invested all your money in one cryptocurrency, and suddenly, its value plummets due to market fluctuations or regulatory changes. The impact on your investment would be devastating. However, if you have a diversified portfolio, the poor performance of one asset can be offset by the better performance of others. Spread your investments across different cryptocurrencies and sectors like DeFi, NFTs, and more. For instance, you might allocate a portion of your portfolio to well-established cryptocurrencies like Bitcoin and Ethereum, while also investing in emerging sectors such as decentralized finance, DeFi, and non-fungible tokens, NFTs. This way, you are not only diversifying across different assets, but also across different sectors within the crypto space. This reduces the impact if one asset performs poorly. Diversification helps in mitigating risks associated with market volatility. When one asset class underperforms, another might outperform. balancing out the overall performance of your portfolio. This strategy is not just about spreading your investments, but also about strategically choosing assets that have different risk profiles and growth potentials. A well-diversified portfolio can help you achieve more stable returns. Over time, this approach can lead to more consistent and reliable investment outcomes. By carefully selecting a mix of assets, you can create a portfolio that is better equipped to weather the ups and downs of the market, providing you with a smoother investment journey. Remember, diversification is key to long-term success in crypto investing. It's not just about chasing the highest returns, but about building a resilient portfolio that can withstand market fluctuations. By diversifying, you are setting yourself up for sustainable growth and long-term success in the ever-evolving world of cryptocurrency. Trying to time the market is extremely difficult and often stressful. Instead, use dollar-cost averaging by investing a fixed amount at regular intervals, like weekly or monthly. This helps smooth out the volatility and removes the emotion from buying decisions. Only invest what you can afford to lose. Understand your maximum risk tolerance and stick to it. Use stop-loss orders to automatically sell if an asset drops to a certain level. Avoid getting greedy and know when to take profits. The crypto space moves fast. Stay informed by following reputable crypto news sources, analysts, and influencers. Attend online webinars and courses to keep learning. Staying on top of the latest developments will give you a big advantage. There you have it. 5 essential tips to keep in mind before investing in crypto in 2024. These tips are designed to help you navigate the often volatile and unpredictable world of cryptocurrency. As the market continues to evolve, staying informed and prepared is crucial. Remember, always do your own research. This means diving deep into the projects you're interested in, understanding the technology behind them, and keeping up with the latest news and trends. The crypto space is filled with opportunities, but also with risks. By educating yourself, you can make more informed decisions and avoid potential pitfalls. Never invest more than you can afford to lose. The crypto market is known for its high volatility, and prices can swing dramatically in a short period. It's important to only use funds that you can afford to lose without affecting your financial stability. This way, you can avoid the stress and anxiety that comes with significant financial losses, and have a solid plan in place. This includes setting clear investment goals, determining your risk tolerance, and having a strategy for both entering and exiting the market. A well-thought-out plan can help you stay focused and disciplined, even during times of market turbulence. Wishing you the best of luck on your crypto investing journey. The world of cryptocurrency offers exciting opportunities, but it's essential to approach it with caution and a well-informed mindset. By following these tips, you can increase your chances of success and make the most of your investments. Let me know if you have any other questions. I'm here to help you navigate this complex and ever-changing landscape. Whether you're a beginner or an experienced investor, staying informed and prepared is key to achieving your financial goals in the world of cryptocurrency.